Hey, it's Kevin Amolsch, Pine Financial Group. We work together so you succeed. Hey, you found us here on Facebook or on YouTube. Be sure to hit like, subscribe, and leave some comments below. We'd love to interact with you, especially during these trying times. Today, I want to talk about forbearance agreements and specifically how it relates to COVID-19, and even more specifically, real estate investors during COVID-19. So quickly, a forbearance agreement is when you are able to defer or miss some mortgage payments without a foreclosure action. Oftentimes, they would continue to report defaults on your credit report, but because of the CARES Act, any loan that's sponsored or owned by the government would be FHA, VA, Fannie Mae, Freddie Mac, any of those, they're not going to be reporting the lates on the credit report. So it can be pretty attractive for investors. I can see this. You're collecting rents in, and you could defer your payments on your loan, build up this little cash reserve, stack some cash in the bank. Makes sense. Well, I want to talk about three myths about forbearance agreements, as well as three deadly facts, little known deadly facts that I think every real estate investor should know. First, a few of the myths, and these are actually pretty positive. The first one is, if you do a forbearance agreement with the loan servicer, any payments that are forbeared or moved, you'll have interest accruing on those. Well, that's actually not true. You will owe the money back, but you're not going to continue to accrue interest on interest. So that is definitely a myth. The second one is that you have to qualify for these. This is really scary because you don't need to qualify. You literally just need to call the loan servicer and tell them that you're affected by COVID-19 and you want to do a forbearance. And any loans that are government supported or owned, they're going to grant you 180 days for free of forbearance. If you need more time, they're going to grant you a 180-day extension with no bank statements, no qualifying of any kind. That's very scary because a lot of people were going to try to take advantage of this, but there are some deadly facts that we're going to talk about as well. And the last myth is you're going to have to pay it all back in one lump sum payment. That's not true. In fact, there's multiple options to pay back the loan, and it's going to be a negotiation between you and the loan servicer. So the loan servicer is supposed to call you within 30 days of the end of the forbearance agreement and offer either a lump sum payment if you can afford it, spread the payment over 6 or 12 months so you just have a little higher mortgage payment every month until you can get caught back up. Or they'll add it to the loan and extend the loan out, and the fourth repayment option that they're allowed to use or at their disposal is just adding those payments to the end of the loan. Okay, so those are the myths. So it sounds very attractive. Why wouldn't everybody be doing this, especially real estate investors? Well, here are the deadly facts, the little known deadly facts about forbearance agreements during COVID-19. First of all, the money is not forgiven. There were some rumors that, hey, you missed 3 or 4 months of payments and you're in a forbearance agreement. They're just going to forgive those. Part of the government stimulus, part of the CARES Act. That's absolutely not true. You will owe the money. The second one is it's going to hurt your ability to borrow. And this is the one that I've been reading a lot about, and there's a lot of confusion about it. But it's absolutely true. It will impact your ability to borrow money, especially in the short term. There are lenders, some of the larger lenders that are already writing or doing underwriting guidelines around forbearance agreements during this time. And they're going to require you to season the forbearance agreement 2 to 4 years. So after you complete your forbearance agreement, which is 1 or 2 years, let's say, or a year, let's say, then you're going to have to wait 2 to 4 more years before you could borrow money again on another loan. And this is going to be Fannie Mae and Freddie Mac, which most of us, that's where we're going to borrow money. Almost all of the loans for real estate investors are owned by Fannie and Freddie. So how is that true if we've already heard that they're not going to report the lates on the credit bureaus? It's not going to impact your credit score at all. Well, that's true. It's not going to impact your credit score, and it's not going to show up on your credit report as missed payments. What it will do, however, is show up as deferments or a forbearance agreement on your credit report. And like I said, the large lenders are already creating underwriting guidelines around this. So if you're a real estate investor and you want to take advantage of good deals, hopefully that we see coming in the next year or two, I would absolutely stay as far away from forbearance agreements as I can. And then the third fact, deadly fact, is do you realize that when you don't make a payment to the loan servicer, that loan servicer is still required to make a payment to the owner of that loan? If a lot of people are taking advantage of this forbearance agreement, especially ones that don't need to, that's going to create tremendous strain on lenders and loan servicers. They will actually go out of business. which is going to create credit tightening, which we saw in 2008. I'm not saying we're going to see 2008 again. In fact, I think it's pretty far from that. But it does put a strain on the economy, and it could hurt housing. And frankly, it's just not the ethical thing to do, in my humble opinion. If you can afford to make your payments, forbearance is an option for you, but I don't think you take advantage of it for the 3 reasons we described. Okay, especially not being able to borrow money again. And that's the one that's confusing people, you guys. It's absolutely true. Lenders will see this as a forbearance, and they won't lend you money in the future. I hope you enjoyed the video. If you disagree with me, agree with me, leave me a comment. I'd love to interact with you. And we'll catch you next time. Check us out, pinefinancialgroup.com.